The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome, everybody, to another excellent edition, a very special edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more, into the breach do we go, dear friends. And as always, we'd like to meet at this time.
The following takes place between 2 p.m. and 3 p.m.
And everybody always asks me why I do that. And I says, because it gives me about 30 seconds to look through a bunch of stuff here, just so I know that it didn't change between now, well, not now, before the top of the hour and now. So I say something and then go, oh, well, something else changed. Gives me just a second. Just a second, go out there. And I don't think anybody got it in the den that I wanted to buy an island and call it the Isle of Lucy. I just call the island Lucy. Isle of, no one gets it. I'm going to have to go back to that joke and find out how to make it work. I still think it would be great just to have an Isle of Lucy. Anyway, 2280 on the S&P cash, basically flat on the S&P cash volume. Pretty good, actually, 2.34 million shares. The CBOE, yeah, I think it was CBOE, came out with volume numbers, and volume numbers have been way up since the election. They were up before the election, too, but even more after the election. So numbers have at least been good in a lot of the derivative products surrounding the marketplace. Volume has been up in the equities fairly strong. In fact, for a day that we're just doing and going sideways, 2.34 million shares, there's something going on out here, and I think I know what it is. We will talk about that in a minute. There's some very important charts. We're going to go to that one first when we do get to the charts, but not much going on. A little spike in the the RSX, which was the Russian ETF, when everybody thought, the one thing I can count on today is that whatever the first story is from the press, it will be a lie and wrong. They've apparently gone off into the deep end so far that they can't see straight. So I saw the first one in about this article about the Russians, and he's let all these other embargoes and everything off on the Russians. Well, not quite true, but the RSS spiked on that. The reality, of course, 15, 20 minutes later, once the head quit spinning around in the press, was that he's going to raise the limit of the money that you can send to the FSB, which is kind of like the FBI, to $5,000. There's a lot of I'm trying to think what they would say in Russian. Permits is probably the closest thing to it. Anyway, they have just literally everything you do in Russia is the equivalent of a permit to do anything, left over from, of course, the communist days. So, to do that, they wanted to raise the level that the actual U.S. companies could spend in Russia to $5,000 so they could buy these permits. And it's an exchange so we can do business over there. I don't know how profitable it'll ever be, but it just goes to show you that probably if you're banking on anything in the media right now, probably ought to wait a while to find out what the truth is. I always loved Sunday nights when they were on C-SPAN, when they show the prime minister having to stand in front of the Parliament, and they'd all ask him a lot of questions like, how much do you still beat your wife? There's literally, as long as you don't call somebody a liar, you can get away with any question to what their equivalent of the president is. But since you couldn't call him a liar, there were 400 different ways that people came up with to call someone a liar. And it was the one I loved the best was this one guy who always used it. He says, I see the prime minister has an economy with the truth once again. You just couldn't say the word lie. And they'd all just sit there and call each other liars with backhanded compliments and all kinds of stuff. But you just couldn't say the word. Couldn't say, you're lying. Well, unfortunately, we've come to this time where tensions are so high that it is kind of tough to figure out what's going on in the media. And yes, thanks. Everybody's already sent me 20 copies of all the fake news stories out in the last week. I've got it. No need to send me any more. My message box is full. Yes, I know the press has decided that it's on its own personal crusade. I don't need any more. And what else is going on here? Anyway, 2279 on the S&P cash. Not a lot going on. A lot of volume. And, of course, this is really the last day of fund buying, but it is not written in stone. What you can do is, if you're a fund manager, you're supposed to be long by the last 3 days or first 2 days or last 2 days and first 3 days of the month. So there is a little bit more that you could see coming back into the Monday morning. Also, you can't throw somebody in jail for not being 100% invested today. Normally, you get a couple of days of fund buyers that might try to bank on trying to get a little bit of a dip in the market to buy. But I would say 90% to 95% of the fund buying is done already. If you're very interested in this subject, there's a website that actually tracks all this. It's called trimtabs.com. And if you need a link on anything I bring up during these shows, you can always email me at path@tfnn.com. But not all that much cash coming into the market, and probably why we've seen some rather muted moves. I added a couple of short positions yesterday at the very end of the day. One of them's kind of flat, so indeterminate at the moment. The other one is a $66 stock that's off 4.5% today. And I think there's a lot more down on that one to come. So we'll talk about that when we complete the trade. But so far, it was the weakest looking stock that I could find in the marketplace and one of my few short-term equity plays out here. Trying to think of anything else going on out here. Just not enough. We will do this, though. We will start the show with a little bit of history.
Then it's all just a little bit of history repeating.
On this day in 1869, in the first warning sign of the coming panic in 1869, the New York paper reports that an IRS auditor has discovered the trustees of several city churches have taken $2 million in ecclesiastical. I haven't said that word in 20 years. Now I won't be able to say it. In church funds and used them to speculate in stocks. What's more, several parishes have taken out mortgages in their church buildings to answer margin calls. If everybody thinks that everything's different now, that people and people's personalities have ever changed, they don't. We just keep moving along and pretending. What's happened in the past will happen again in the future someday. Greed never dies.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we were talking about churches and trading. And I remember it was probably 1999. I know it was before everything blew up in the .com days, but I think it probably had to be late 98 or 99. I heard of this group meeting in this church, and anybody that knows Tampa, it was just south of 275 on Dale Mayberry, RFD. I always add the RFD for Dale Mayberry Street. Anyway, some people will get that old television reference too. But it was very interesting. But man, there were the preacher. It might be something that where preachers just have a huge amount of time. I think maybe it might be something like that. Anyway, this guy was that ran the show was big into trading, and he made this the biggest money maker for his church. But there might be 1,000 people show up there on a Tuesday night, and he'd have guest speakers come in and pay him, of course, to talk in front of these audiences. And pretty interesting deal out there. Of course, it all blew up in the .com thing. But mostly it was a lot of waste of time, except I met Adrian Togerhe there and learned a lot about kind of putting my emotions and ego in check. Doesn't it show? Anyway, liked her, always met her. Had her on my show for a while. I think she's on in the mornings again. But always liked kind of a fresh look at everywhere. Yeah, everybody was a genius in 1999. Just buy it and go higher. But very interesting times. Anyway, wanted to talk about the biggest chart that matters today. Again, I've been thinking that we would see a test of the 116.80, December 16th low in the TLT. Tried to rally today on no volume. Had a little doji yesterday. By trying to bounce back up on the 3x3 displaced moving average, I'm going to say that the odds now of it hitting 16 116.80, which is that December 16th low, is probably more like 90 to 94%, 95% now before it finally bottoms out. One of the reasons why, and we brought it up, is just the huge energy off this top from January 12th. It's been huge under this January 26th low. We kind of bounced, kind of going sideways out here. You had one day kind of shook a lot of people, which was the 31st, but closed down the next day. Kind of energy came in. You had a doji. Today you tried to rally again, gave it all back. This looks to me like this thing's going to probably gap down like it did on the way up, where you had, just a whole bunch of gaps. My guess is this thing is going to gap away. That gap away tomorrow might be on jobs numbers. I was talking to one of my subscribers today, and he was doing something that I'd already seen an article on yesterday, and that is the amount of small businesses hiring over the last 30 days. Most of that is that they were very nervous about hiring somebody because all they could do was under 30 hours, and then they had to start getting all involved in the medical debate. That mandate is probably going away. Has a lot of people hiring, not just 2 people at 20 hours a week, but full-time employment. Those numbers are going to come out tomorrow morning, but the ads down here are absolutely slammed with not part-time but full-time employment, at least around in Tampa. A little anecdotal, but I think it was not the Commerce Department, it was U.S. What is it? Not the government commerce one, but what's the other one? I'll think about it in a minute. But pretty big. So the thought is, at least for me, is these job numbers can come in and they can be very big tomorrow. And that would be kind of the end of the thought that there is no April-May rate hike. The odds went down a little bit since the Fed came out yesterday, but not enough. My guess is that they're going to go right back up and much higher if those numbers come in anywhere close to what at least some of the evidence. No, those are all government entities. What's the Chamber of Commerce is what I'm thinking of, because it's a private group, right? I'm pretty sure that's the one I looked at. Anyway, numbers were very good on hiring for the last 30 days. And are these big jobs? No, they're not $300,000 a year jobs, but they are 40-hour-a-week jobs that hadn't been up to this time an issue. A lot of people just, I think, trying to get on the leading edge of maybe the mandate going away that was very tough for small business, and I think they think it's going away. Maybe a little bit ahead of themselves on that. I think I saw that the vote is supposed to be on that before the end of the first quarter. So maybe a little people getting in front of themselves. Anyway, TLT, probably the most important chart that we're looking here. It led on the way down. If you listen to my show during the fall, I said it was the most important chart we were looking at. That was back when this thing had basically set up a really big ABC down. It's completed it. So the thought that maybe it breaks 116.80 the first time, I'm not thinking that it will. I think it will go down there and test it. In fact, you're better off coming down there and testing it now when it doesn't have as much volume. You might get a low out here. But even then, I think it's going to go sideways. The energy off that 123.14 high from January 12th has been, 30% higher? 25%? We'll call it 25% higher. Maybe almost 30% higher on the way already. So it's not like the volume on this last leg back down on the TLT has started to come off. Now, there's one other thing, and I've been seeing it for a while, and that is a lot of these more thinly traded charts. I haven't shown a lot of them, but mostly these things are in the junk bond part of the business. This is where you always get some kind of contagion or some kind of thing that you'd never thought of that kind of blows it up in everybody's face. Whether it's the long-term capital management debacle in 1998 or other junk bond fiasco things like the savings and loan in 1990. This is kind of where greed really takes over. A lot of people never think these things can go bankrupt as they do in a heartbeat, but a lot of junk bonds out there, and these things could get horribly squeezed if bonds continue to go lower. Let's go through some earnings. You can always give me a call at 877-927-6648. You can email me at path@tfnn.com. And, of course, you can do a lot of other things, too. But I would know about them. So you have to do those things. Let's go back here and look at it real quick. Okay, 2277 on the S&P cash. Volume is good. I wonder if this all this volume is fun buying, but guess what? There's just as many sellers as there are buyers. When that goes away tomorrow, is that the equivalent of when the music stops in musical chairs? I think that there is a better than not chance that that is true. We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And I had an emailer ask me to just take a quick look at the RSX. And I mean, you tested the high on just a tiny bit lighter volume. You kind of did that again today. There's, I don't know, this is probably about as good as it can get. I don't like the energy from the December 23rd low back up to this January 27th high. So, there's not a lot of movement in this ETF anyway. I think there are probably greener pastures, but you can certainly look at the wick at here today when the story came out that wasn't quite true, and then the reality of the story came out 15 minutes later. I wonder how many of these press guys are paid off by people in the stock market sometimes. But I do digress. Fake book. Pretty ugly candle up here, at least short term. I didn't like this one much. I didn't think that there was enough money out here to really make anything, and so far, pretty much correct. When I'm really looking at this big W pattern in the chart itself, it's that October 25th high at 133.50 goes down to the November 14th low at 113.55. Now, my power law vector indicator had a lot of energy on the way down. That was a 12. Now we get pretty much the same thing, the December 30th low at 114.77. This goes right up because everybody knows they're going to blow out earnings. Goes up to the high yesterday, spikes it this morning, and, of course, a big reversal and fairly decent volume. We'll have to see how this comes back in. Now, I'm not a big fan of shorting stocks that have fairly good business models. This one knows how to make some money. They've been kind of had an economy with the truth when it comes to page views. And even after the bell last night, I think it got to 137, 138. I think I saw some prints in there after the bell last night. But the energy on the way up was never that big. It has spiked the previous high of that 133.50. It had 28 million shares. It's done so on more volume out here, which would suggest this thing's going to get retested. Not a horrible stock if you want to be long, but certainly a very decent short-term high in this. I would probably, if you were going to buy it, I don't understand any risk reward that says buying this above 123 right now. You've got some pretty good movement in there that says that this is where this thing probably will come back to, if I'm right, on the general market pulling back. So I think you got plenty of time. No reason to buy this up here. Energy was light on the way up. And I don't know. I have a feeling that, just some of the other things that the Facebook folks are into might cause a little bit of a problem, a distraction from them really running their business correctly. Anyway, AMD, it spiked its previous high. It was up to like $14 after hours last night. No so much today. Massive volume through the previous high, but can't hold it. December 28th, this had 71 million shares. Yesterday, it had 92 million shares and 165 million, yesterday into that. So you had a lot of movement out here in AMD. We'll go through the rest of the movers on energy. Avalon Bay Communities, this thing had come back to its gap, pretty much filled that gap yesterday. Got a lot of people on the short side, popped them today. Energy is good, but not great. I would say that if you're looking for a short in some of these, that you probably want to wait till this January 6th high is tested. 180.69 on this one. That's from January 6th. In the biotech sector, we did have a big gap down and blow away by Biogen. This one, I kind of watched this one, and this is kind of a good indication of why I spend so much time on stocks that are testing previous gap positions out here, and that is were these things able to hold up and have light volume when they did come back down? Well, big move down, but not a lot of juice so far. You are going back into a strength on BIIB, which is the 21st of, July last year. This thing gapped up with 5.5 million shares. So far, we're down with this 2 million shares back into that gap. And again, I probably had 20 of these in the newsletter, maybe 10 in the newsletter this morning. And that is these stocks coming right back down to where these double gaps are. And I was pointing out targets in a great deal of them. But you've got, where you've got continuous open gaps. And the way I do it is I don't include the wicks. I only include the bodies of it. And once the gap is two-thirds filled, it no longer shows in the art of timing the trade charts. So it does kind of move it down to give you a better position. But you've got the first gap down that starts on this one on the 7th of June 2016. Then you gap up back over it with not so much energy on the, July 21st. So this thing pops down, huge volume, pops back over. The volume is good, but not as strong. So it's always going to be a little suspect. You go up to 33.65 on August 2nd. You come back into this at 329 on November 10th. The volume falls almost in half of that 333 high. So you know this is probably going to be kind of weak. You've got almost a three-gap play setting up. You actually had two big gaps in this back up to that November 10th high. And now it's kind of been selling off with some spikes coming back down. But this is kind of filling it. If I was short this thing, I would probably be ringing the bell right now without this volume that fills this double gap. And a lot of these stocks are just coming right back down to these double gaps. Can't say that I would want to buy it just yet, but certainly it's time to ring the register if you were short from 330 on this one. BSX, Boston Scientific, a nice pop on this one. Volume is not there, though. You needed about 25 million shares just to meet the previous high. Got about 14 million shares so far. It looks like it might hold over that high, but be suspect. On the downside, on the loser horn, do I have a loser horn? I think I do. Where's my loser horn? Oh, there it is. Cirrus Logic blown away. One of the two stocks that really got hammered last night after hours, although there were several of them that were down lower. We'll talk about that. Anyway, Cirrus Logic down on a pretty huge volume. This thing has gone back to its consolidation area around the $54, $55 level. But you still have an untested low on December 1st, which takes you to $49.05. I suspect that we're coming back down to that level. European banks didn't do well, missed on earnings. These things had been run up mostly by just chasing perennial shorts out of them. This one had a little doji yesterday. Earnings out today on all these, I think several of these European banks showed that everybody was way over optimistic. Again, I'm looking at a lot of these double gaps as the places for targets for where these things are going. Beautiful double, triple. Is there a triple gap? There actually is. There's a triple gap at $17 on Deutsche Bank. I'm putting my pin the tail on the donkey at $17 on Deutsche Bank. We'll be back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Anyway, we'll go through the rest of these. Do we have time? We do. I think I can get through most of these. Amdoc's a nice low, open lower, but no big signal out of that one. ETFC, which is E-Trade Financial. Although volumes are up, profits are down. This one down on huge volume today, blowing through all the consolidation, pretty much back to mid-November out here. You got a gap at $30, so maybe another $3 down if this thing continues. And of course, that's going to be, if the market continues down, that's going to probably continue down too. On the downside also is Edwards Life Sciences, down fairly strong with decent volume. Gap at 84.50, 84.70. Looks to me like that's where you're going to be taking a look at. We already talked about Facebook and the fake book down. Volume's pretty good out here. To FNF. Nothing in that one. IDX Laboratory. You would have liked to seen a lot more volume in this move. This is a decent breakout. Volume's okay. I don't know if 2 million's enough to make me think that this thing doesn't come back and fairly quickly fill this gap. But that may be a great buy at about 122. This thing comes back in the pullback, and you watch this thing in 2, 4, 6 weeks or something. If it can come back and fill that with light volume. Earnings were pretty good on this, so it looks good. Now, here's the one that is probably, if you're talking about an equity, one of the most important equities in the stock market that no one talks much about, and that's international paper. And the answer on why it's important, if you're building a lot of new things, you need boxes for it, you need wrapping for it. And when this thing takes a nosedive, you always have to kind of take a look at it. It may seem kind of counterintuitive that small businesses hiring workers, why big businesses may be crested, but most small business not buying 1 million bags for dog food, which I knew actually a salesman. That's all his job was for international paper. All he did was run around and sell packaging, i.e. paper products for dog food. Anyway, down, monstrous volume, blew away everything. If you want to talk about a stock, when I talk about stocks that are just going sideways for a while, and then they pop out of it, normally you want to take your cash fairly quickly, whether it's an asymmetrical triangle or whatever it is. Generally, those don't last all that time. You get a nice pop, you want to take your money in normally about 3 days, and this would have been about perfect on that. But international paper giving you kind of a warning sign that big business, like all the stuff that gets surrounded by paper. Now, part of this is they build a lot of housing products too, and I think some of those housing for new housing might be in that too. I'm going to look at that over the weekend. Gardner IT didn't really do anything, open lower, moved back up. These guys give us all a lot of intel on Intel, the company. Any kind of technology company, you'll see a lot of articles referencing it. Kennametal tried to spike here earlier this morning, gave it all up, mostly all of it back up, kind of back in the range here. And again, I think it was, wasn't it U.S. Steel? They had kind of a nice move out here. And volume's good, kind of coming back. Just to get the risk reward right, though, I would have to wait for U.S. Steel to get to 27 bucks. And that may be a good buy there. Ideally, I'd love it at 24. I'd have to marry it, yes. I don't need a bunch of emails. I get them every time I say that. You can email me something other than that at path@tfnn.com. Call me at 877-927-6648 or post a message in the den. Mid-America apartment communities, this thing looks like it's trying to get back up to this big gap down. That gap occurred on the 15th of August, 3.7 million shares. Today, we're kind of headed back up with about 1 million shares. Can this still get to 99 bucks or 100? I think it could. It gets up there on light volume. This may be a very tasty morsel for a short. Gapping down is MetLife. Again, when stock markets tend to go sideways for a while, insurance companies don't tend to be in the high flyers. And if you're kind of a fund manager building a lot of the money in these life insurance style companies, you need kind of a trending market. We really haven't had that much. We've had some big days, but they really haven't gone to the bottom line of a lot of the stodgy old companies that insurance companies have in their portfolios. Everybody's been tech crazy along with Facebook today that's kind of rolled. And that didn't have done much for MetLife. Just remember that a lot of these insurance companies are proxies for what the stodgy stocks in the market are doing. And what else do we have? MJN, Mead Johnson's got some kind of deal going on for a buyout. This thing popped very hard, huge volume. Now, I don't know if you could have pulled the trigger yesterday, but it had a test. What would have really disturbed me about being short into this, I didn't see enough light volume to buy it, but I would have probably covered it if I had been short. And that is the low volume move from January 19th back to yesterday's low. You got underneath the previous low over a few days out here, and you didn't have the volume. So being a good trader out here, if you'd been short this thing from 93 or whatever, betting on the end of the world out here probably wasn't a great deal. And again, don't wait too long. Sell when you can, not when you have to. In this case, it would have been cover your short when you had to. And or if you were thinking about buying it, it didn't look that bad. I would have had to, for me, I would have had to seen like 1 million shares maybe the day or two before, and they were all about 2 million shares. But I like the action down here at the lows. This thing went sideways. You could see that there's probably someone out here buying this thing right around the $70 range. That goes back to the 10th of November. Again, when you see these kinds of sideways moves, normally, if it's not just at the high and pressing the highs, this is some kind of form of accumulation. You got a little pop out here, the pullback, and that pullback was on light volume. Sell, if you get a big move like this sideways, sell in 3 days. That's basically what I'm saying today. Merck didn't have everything going for it in its earnings. It popped and ran anyway, though. Not a lot of energy. It's back up to this gap down from the 11th of November. That volume came in at 14 million shares. I don't know if you can say a lot about it. Not a real good pattern for either being short or long. NXPI, not much going on in that. Now, Qorvo was down pretty much for last night to where it opened this morning, which is about $61. Now these guys are the old RF micro people, and Broadcom and a lot of other associated companies kind of went together in this thing. It is a somewhat proxy for the wireless smartphone industry that this one got so hammered, kind of especially after Apple kind of getting up to that high at the end of the day, also made me kind of say a little bit. But, down decent volume, probably as strong as it's going to be in the last few months. But still a little weak. I'm looking for the double gap at $59 on this one. We'll be back in.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And that's right, Tom O'Brien. After this show for 2 hours, he'll have Andy Heck on for one segment, I think early on Thursday, isn't it? And maybe another guest. And then, of course, Andy at 5. So anyway, we're looking at the rest of the stocks that are moving on earnings. Ralph Lauren down. It's blown away everything. We'll go back even a little farther out here and look at it. But basically, it's blown everything away. Everybody in a losing position back to February 11th of 2016. So we've got a good year. Now, CEOs changing, a lot of that kind of stuff happening. So we'll figure out if anything's there. But my guess is it's just kind of losing its shine, and that is brands do come and go. and fashion is fickle. Not as fickle as the fickle finger of fate. So, anyway, another one gapping down, monstrous volume, $42.09 is the low so far for Shutterfly. This is a social networking kind of Instagram-y thing that I've never used, never really understood it. Very low revenues and, of course, no profits. So what do you expect out here? The old souffle, someone slammed the door, and that's all that was left. Tractor Supply, another one out here. Some of these retail stocks looking a little bit better than they have in the past. I still wouldn't bite because I think that the general market's coming back, and that makes it problematic. But some of them didn't look too bad. I'll see how they did by the close tonight. Tractor Supply did a little bit better, but they've been selling it off all day. Again, retail stores, very tough against Amazon's juggernaut. Again, Amazon after the bell tonight. Don't really know what to expect because it's all about how Amazon does its books. The only thing that tends to freak out traders and investors in Amazon is if they're spending money. Most of their stuff is fairly, or has been traditionally, low margin. And when they start saying things like they said in the last couple of days, like they're building a $1.6 billion facility in northern Kentucky, where I lived actually for 8 years. I know the area well. Very interesting area, but to me, the bigger thing is every time they take another one of these steps, it becomes a very easy step for the feds to come out with a monopoly and restraint of trade issue legally. And as one wise guy in the den said yesterday, they are one tweet away from a $200 drop. And that's kind of the way you have to kind of look at this. I don't think it would actually be a tweet. I think it would actually be legal action. And that's, if I was going to play it and you want to own Amazon, I'd say go ahead. I would just say, for the most part, the way to play that is going to be with options so you can limit your risk. I may be totally wrong on their ability to one day get sued by the government like Microsoft did, but the case is probably 10 times better on Amazon than it was for Microsoft in 2000. And as long as they continue to go vertical, which is what a lot of the law applies to for those monopoly type issues, continue to think about it. The other option has been, and been floated around Washington for the last few days, is that they will impose sales tax across all state borders using the Commerce Clause of the United States. And I don't know if it's legal or not, but it would mean that about 20 of the states that you don't pay sales tax in right now, you would have to. So there's a few things kind of hanging out there. Unclear if one of those are on there. It's a, it's a $800 stock. I should have had the chart up. It's an $800 stock. Why not use options? I think they're going to be better off for you. Lower the risk. We'll be back tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.